from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, what now? A judge throws out the FTC lawsuit against Facebook, but gives the government an option to refile within 30 days. It all comes down to new chair Lina Khan, while Congress is also pushing for tougher antitrust legislation. Plus, just in case you forgot, we are still in a global chip crunch. Intel, the latest to say another chip is delayed. Shares falling. And one step back, more steps forward, maybe. Even though the latest SpaceX launch is delayed, Elon Musk insists his Starlink satellites will bring internet to nearly everyone in the world by August. Those stories in a moment, but first, U.S. stocks managing to close at another record. Let's get straight to our Kriti Gupta with the latest. Kriti, take it away.
Well, Emily, green on the screen once again, and this time what was supposed to be a cyclical friendly day really turned into that growth outperformance. And what do I mean by that? Tech really taking the lead once again. You can really see it in the chart behind me. The S&P 500 flat on the day, but that NASDAQ 100 outperformance is really all you need to know when you're talking about those tech stocks. And of course, with that tech outperformance, you always have semiconductors really just taking it one step forward and just gaining even more. But let's just look under the hood, because a big chunk of those gains came from Apple in particular. Now, this is really crucial because today, you not only did you see Apple gain, but all of the names in its supply chains. This, of course, coming after a note coming out of Barclays, the analyst. And I just want to read this quote for you. Bear with me. The analyst says names leveraged to Apple are positioned for beats and raises into earnings and are likely to outperform into the fall. So this is something that's kind of unique that we've started to see with the supply chain benefits as well. This is something to watch into the summer and, of course, like the analyst said, into the fall. So let's just zoom out one more time and talk about that growth versus value trade, because value has really been the key outperformer year to date, but growth is starting to catch up. And as we go into the last day of the first half of the year tomorrow, it's worth noting that the growth stocks, that's that orange line right here, is only 1 percentage point away from that value outperformance on the year-to-date basis. So really crucial here to talk about the growth of value trade. We're saying that growth may be dead, but growth actually may be alive and thriving, Emily.
All right. Bloomberg's Kriti Gupta. I know you'll keep tracking it for us. Thank you. Meantime, Monday, a victory for Facebook, convincing a judge to dismiss 2 monopoly lawsuits filed by the U.S. government and a coalition of states seeking to break up the company. It was a huge blow to efforts by antitrust officials to take on the biggest tech platforms. However, the victory could be short-lived as the FTC reviews its options. One being to revive the complaint if the agency can prove the social network is in fact a monopoly within 30 days. This time, the FTC has 32-year-old Lina Khan, known tech foe, in the driver's seat. To discuss, we are joined by David Kirkpatrick, Techonomy founder and our Bloomberg contributing editor, and also with us, Bloomberg Technology team leader, Sarah Fryer. Sarah, I'll start with you. First of all, talk to us about the FTC's options right now, because they certainly do have a chance they can bring this case again if they meet a certain threshold.
Well, the judge made it very clear that the biggest problem with the FTC's complaint is that they didn't actually prove that Facebook is a monopoly. They said that they have had more than 60% of the market for years, but they didn't define that market well, and they didn't give any data to back it up. And the judge is saying, listen, if you're giving me user numbers, if you're giving me time spent, that may not be enough to satisfy the idea that Facebook has a monopoly on personal social networking. So I think it's going to be really difficult, because how do you even define the market that Facebook has so controlled? That's going to be the biggest challenge for the FTC going forward, is making sure they have the right data and making sure that they can make a strong argument that when you're looking at Facebook, you don't also have to include YouTube and TikTok and Snapchat and LinkedIn, even iMessage, all of these other companies that help people connect with each other online. Are those competitors in the same market as Facebook or not? Do they have a monopoly? It's a pretty central question, and the judge is not going to consider anything else in this case until he has that one answered.
David, do you believe Facebook, including Instagram and WhatsApp, is a monopoly?
You know, I don't think it's that clear. It's great to be on with Sarah, who really knows so much about this. But uh, I would even throw in services like Discord or Twitch. And even if you want to be more broad in your thinking, services like Roblox, there are a lot of growing services that have very powerful market share in segments of the user community that say Facebook could point to and say these are in effect social networking services in some way or another. But to me, it may be somewhat immaterial regarding what Lena Khan ultimately ends up doing.
So what do you think Lena Khan will do? I mean, it's interesting given, this is obviously, she's obviously been on the opposite side of big tech, but now she is the chair of the FTC. She has been pushing for harsher antitrust laws, but she has to prove that Facebook is a monopoly without also arguing that new laws need to be passed. So, David, what are Lena Khan's options and what path do you expect her to take?
Well, it's interesting that Lena Khan is in this position because she got the job partly on the strength of her own arguments that monopoly and antitrust violations need to be defined more broadly than they have historically been, which was just consumer pricing harm. She wants to define it as other ways of harming consumers, and I think she's got a very strong case, and obviously many others agree, or she wouldn't have been named head of the FTC at such a young age. But she has two options specifically here. One, she could refile this case, possibly with a stronger argument about monopoly, or she could decide just not to do that at all and to file an entirely different case based on a broader theory of consumer harm, which I think is quite possible. In any case, she is a very innovative thinker about what constitutes consumer harm by a tech platform, and she is going to take action one way or another.
Sarah, you've covered Facebook for years. They have maintained that in this particular case, the FTC wants a do-over after already having approved the Instagram and the WhatsApp mergers. What is the level of confidence that Facebook has right now about this particular case and about further regulation down the line? Because part of the issue is that Facebook, it'll be much more difficult if new laws passed and given this scrutiny for them to do any more deals in the future.
Well, listen, I think internally at Facebook, they have been hesitant to do deals. That has been a big issue for them. But that said, they're celebrating with this decision yesterday. Zuckerberg posted something on Facebook saying how proud he is to have connected the world. I think that they're especially proud that they are the fastest company ever to reach a $1 trillion market valuation. That just happened yesterday after this case was dismissed. So listen, I think that it's a good time to be Facebook right now and see this weakening of the government argument. But it has been a rallying call for Congress to think about new laws. And I think that maybe David's right. Maybe Lena Khan has to come at this a whole new way, because when you look at the FTC argument, they're trying to argue not just that those acquisitions maybe shouldn't have gone forward, but they're trying to argue that Facebook had monopolistic tendencies afterwards, that because they adopted this crush, compete, or acquire strategy, that deprived, the fact that they control Instagram and WhatsApp deprived the market of innovation that would otherwise have occurred if they own them. And that's a really squishy argument to make, that an alternate reality would be better. And I think that it's just extremely hard to prove. So maybe if they came back with a different kind of argument of harm, it could be stronger.
Now, David, you actually think the biggest legal threat to Facebook right now may not be in the United States, but is actually a piece of legislation in the EU. Tell us about that.
Well, I would not be celebrating right now if I were Mark Zuckerberg. He's got innumerable legal challenges ahead. Aside from the many bills that have emerged from the House that may or may not pass into law in the United States, the EU has something called the Digital Services Act, which has been introduced. It will take probably a year or even more to pass through all the phases of turning into actual legislation. but the chances are it will become law in some form. And one of the things it does is it basically sets criteria for how Facebook and other big platforms have to respond when the government says that content is illegal. They are required to take content down immediately if the government says content is illegal. That's something new. It also will impose new restrictions on them regarding the transparency of how their services work, including how their algorithms work. That is a very significant part of the legislation. Those are big, big possible challenges to the way they operate, which, if they became law in the giant EU, which has more people in it than the United States, that could really begin to influence law all over the world, just as the GDPR law in the EU has influenced law regarding privacy globally.
All right. Well, certainly many threats, many potential landmines on the horizon. Thank you both for helping us break it down. David Kirkpatrick, our Bloomberg contributing editor, Bloomberg technology team leader, Sarah Fryer, appreciate it. Meantime, another story we are watching, Walmart is moving to counter Amazon's push into prescription drugs. The world's largest retailer will offer its own brand of analog insulin for folks with diabetes. Walmart says it'll be as much as 75% cheaper. 15 years ago, the chain disrupted the industry by offering generic drugs to treat everything from allergies to high cholesterol. Insulin treatments will cost just $4 a prescription. Coming up, the U.S. is sounding a bit more bullish on stablecoins. We're going to look at the case for a digital dollar and what crypto regulation is coming. Next, this is Bloomberg. Bitcoin rebounding, at least for now, after a wild ride the last few weeks. The most popular cryptocurrency has extended its rebound and rallied above its average price over the last 20 days. Meantime, Fed Governor Quarles is sounding more bullish on stablecoins, saying, quote, "In my judgment, we do not need to fear stablecoins. The Federal Reserve has traditionally supported responsible private sector innovation. Consistent with this tradition, I believe that we must take strong account of the potential benefits of stablecoins." I want to now bring in Jeremy Allaire, co-founder, chair, and CEO of the digital currency company Circle. Jeremy, thank you so much for joining us. What do you make of Fed Governor Quarles' remarks there? What's the big takeaway?
Well, I thought it was obviously very, very positive for the continued rapid development of private sector-led innovation in the digital currency space. I mean, we've seen years of innovation from public blockchain infrastructure, which are really the building blocks for how we can bring financial market infrastructure and currencies onto the internet. And we've seen dramatic growth in dollar digital currencies like USDC. And I think what I read from those comments was the private sector is innovating very fast. There's a history of private sector electronic money. That is, in fact, the history of electronic money innovation in most of the world, including in the United States. And that the Fed and the government as a whole should be thinking about not just research projects into digital currencies, but how to take something that's not just aspirational, but that's already operational, and make sure it can be run in an effective way, ultimately to the benefit of people and businesses in the United States.
So give me the case for a digital dollar.
Well, I mean, I often get asked the question, what's the use case for USDC? And my answer is, what's the use case for a dollar? The incredible thing about this is what we can do is we can take that durable, reliable dollar, which inherits obviously from the underlying safety and soundness of the Federal Reserve and the fundamental monetary policy of the United States. And we can convey onto that dollar the superpowers of the internet, the ability to transact instantly, globally, both peer-to-peer, with businesses at the speed of the internet, with very, very fast settlement finality, and at a fraction of the cost of the way electronic money moves today. And so you're really just bringing true digitalization to the currency itself, There are many, many other benefits that extend beyond that because of the programmable nature of money that exists on these blockchains. But fundamentally, you're just taking the power of the internet, conveying that onto a dollar, and making that widely available to everyone in the world.
How much interest are you actually seeing from corporate treasuries to invest in stablecoins like USDC?
Well, this has been a fascinating phenomenon. We've seen just in the past couple of years pretty dramatic growth in these sort of borrowing and lending markets that have built up around stablecoins like USDC. And so you're starting to see essentially institutional quality lending markets and yield products that are built on those. We recently introduced something called Circle Yield, which is specifically targeted at corporate treasurers and financial institutions and others. It's actually remarkable the number of traditional businesses that are looking at ways that they could allocate capital in a responsible manner into these stablecoin-based lending markets. And so I think that's a phenomenon that we've begun to see, and I think it's a phenomenon that's going to grow pretty dramatically in the next couple of years as these digital asset markets continue to grow as well.
That said, I know these comments from the Fed governor are what we wanted to hear, what you wanted to hear, I should say. However, if you look worldwide, the increasing crackdown that seems to be happening from China to the UK, and even in the US, where we're still waiting for approval of a Bitcoin ETF, it's not happening right now. And I wonder how big a risk that is, and if you really believe that regulators will, in the near term, come on side, or if this is going to be a years-long process.
Well, look, as someone who got started in the crypto industry 8 years ago in 2013, when people talked about regulatory risk and uncertainty, let me tell you, it was a very different world then than it is now. Where we are now is that crypto is a $1 trillion plus infrastructure. It has an incredible amount of innovation and investment happening behind it. Major financial institutions, major corporations, major internet companies, all building up around it. This is the next logical infrastructure layer of the internet, and it's happening. And what's notable about the regulatory engagement, I don't view it as a crackdown. I view this as an engagement, as something becomes, sort of at internet scale and impacts billions of people. Absolutely, you're talking about financial instruments, you're talking about the financial system. Of course, you're going to have regulators that want to understand it, that want to make sure that fundamental risks, whether those are crime risks or safety and soundness risks, consumer protection risks, that these are all taken into account. And that's the job of regulators. So I don't view this as a crackdown. I view this as highly constructive engagement all over the world as this industry becomes a massive industry.
So meantime, I know you're focused on CBDCs, but what about the altcoins out there? Is there anything that particularly strikes you as fascinating, as encouraging, or do you see a lot of risk?
Look, investors beware if you're looking at any given crypto asset. What I would say is there's an incredible diversity of forms of crypto asset innovation, from digital commodity money like Bitcoin, digital commodity money like Ether. Decentralized finance protocols and projects are incredible in terms of what they're introducing into the world. Those types of digital assets have grown quite significantly over the last year, and I believe have a long way to go. And then we're seeing, novel new forms of innovation in crypto assets, where we see things like actual intellectual property and digital content becoming crypto assets as things that people can purchase and trade and the like. And so we're at the very beginnings of what I think will ultimately be a world where there's millions of different digital tokens that people are interacting with in everyday commerce, and certainly from an investment and capital markets perspective as well.
Okay, lots to think about. Jeremy Allaire, Circle co-founder, chair, and CEO. Thanks so much, Jeremy, for joining us.
Thank you.
All right, coming up, broken promises from Intel, the latest on why the production of its Xeon server chip is being put off till 2022. But a delay for Intel's latest server chip, a win for rival AMD. Shares rising off the announcement. We'll talk about it all next. This is Bloomberg. Intel Intel shares falling after the company said its Xeon server chip line will not start production until 2022. Intel CEO Pat Gelsinger has pledged to make Intel a global chip leader once again, but the delay not doing much to boost confidence. Joining us now, who else but our Bloomberg News reporter Ian King, who of course has covered chips for a couple of decades. Okay, it's one chip, but why is this such a big deal?
Yeah, I mean, when you've had the kind of last couple of years that Intel has had, you can't really afford to be saying anything that starts with delay later than we had planned or anything like that. And this is really what's going on. And Xeon, as you know, Emily, is its most profitable lineup. So any new version of that chip that's delayed, another window of opportunity for the opposition, and it hurts them really where the profits are.
You and I spoke with Pat Gelsinger a couple of days ago. He was very optimistic about Intel regaining its leadership. Does this seem to come out of left field, or was it expected?
Yeah, I mean, as we know, new designs take months, if not years, to come to fruition. So he only really took over in February. So it's not really happened on his watch, but up until recently, he was saying that this would, be arriving this year, and now the company are out there saying actually probably next year. So it doesn't look great for him, and it's really triggering some kind of bad memories for investors.
Well, and most of these issues thus far haven't happened on his watch, and so how much confidence should we have that he will be able to right the ship? That once he is there for a long, he just finished 100 days, right?
Yeah.
Once he's there for a few hundred days, that these things won't happen.
Yeah, I mean, I think the biggest issue that a lot of investors and analysts had with Intel was that they weren't really even acknowledging what the problems were, or only sort of acknowledging them well beyond the point where they should have been. Pat, as we've heard from him, is straight up front saying, look, what we've been doing is not good enough. This is what we're going to do to fix it. So it's been a new breeze in terms of the messaging, and I think that's really sort of restored a lot of confidence. But the downside of that is these things don't get fixed quickly at a company like Intel.
What does this mean for AMD?
It's more of an opportunity for them. It's more time for Lisa Su to be out there saying, hey, we're a viable alternative.
And when it comes to AMD, it seems like there is a lot of investor confidence. That is not lacking.
Yeah, absolutely not. I mean, as we've spoken with Lisa like you have, she just says, look, we're going to do what we say. There's very little hype there. There's very little sort of flashiness. There's no sort of fly-by-night sort of activity that we've seen from AMD in the past. It's very much a look, we're just going to keep our promises, and that's a nice contrast with Intel right now.
All right, we'll see how much time investors give to Pat Gelsinger. Ian King, as always, thanks so much for bringing us that update. All right, coming up, while the Facebook cases were dismissed, Google facing extra heat from the Justice Department. We're going to talk about the impact of the antitrust lawsuit with one former Google executive who started his own competing search engine next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Breaking news, Didi, the Chinese ride-hailing giant, said to price its shares for its U.S. IPO, expected to happen this week, at $14 a share. At that price, the company would raise about $4 billion in the offering. That compares to Alibaba's $25 billion debut back in 2014. At this price, Didi would have a market value of about $67 billion. But of course, we'll have to see how investors respond. We will be all over that offering tomorrow, happening on the New York Stock Exchange under the ticker Didi. Meantime, the Justice Department has stepped up scrutiny of Google's digital ad practices in recent months. The Biden administration pursuing an antitrust probe that started under former President Trump. This on the back of the DOJ suing Google last year, saying it's abusing its dominance in internet search. To talk about it all, we're joined by Sridhar Ramaswamy, who oversaw ads at Google for years before leaving to start his own search competitor. He's now the CEO and co-founder of the ad-free subscription search engine Neeva and a venture partner at Greylock. Sridhar, thank you so much for joining us. You must have stories, so many stories in that vault there, I'm sure. I'm going to try to get as many out of you as I can. Look, you oversaw Google's ad products for years. What was it that sparked you to leave and start a competitor? What was Google doing that you didn't like or not doing well enough?
Well, I'd been at Google for over 15 years, and at one level, I wanted to change. I also came to realize that a world in which 2 or 3 companies were essentially the gatekeepers for merchants discovering any consumer at all wasn't a great one. And that advertising with things like tracking that just come along with it was just not a great environment. In many ways, Neeva was Vivek, my co-founder, and my attempt at a drastically simple product. We created Neeva as an ads-free private search engine paid by the customer because we thought that was the best way to create a high-quality product. And that's how Neeva came to be.
So it's $4.95 a month. What makes you think consumers are going to choose this when they can get it for free?
Well, I think what we've all learned over the past 10, 15 years is when the product is free, we are indeed the product. I mean, you've heard this before. But the fact of the matter is that search advertising is a giant market, $150 billion of revenue worldwide. And you know what? When advertisers pay search engines that kind of money, they turn around and charge you and me. And so we wanted to create a product that had a singular focus on doing right by you. This not only meant no ads or even any affiliate links, but it also frees us to create things like personalization. The experience is very customized for you. We focus on what are the best offers for Emily. How do we make sure that the search experience is the best that there is? Plus, we also support quality content on the internet. 20% of our gross revenue is reserved for supporting content. It's for all of these things, a product that is focused on you first and foremost, plus you support great content that we think will make us a convincing product at that kind of a price.
So you claim Neeva offers higher quality, more relevant results. How do you back that up? After, given that Google has spent decades perfecting its technology?
Well, that is a work in progress. Google has spent, tens of thousands of people and 15 years working on it. The fact of the matter is, not being forced to serve ads just gives us so much more freedom in terms of how we innovate. We build on some existing services, but we also add layers that let you personalize the product, something that a Google cannot do. A feature that we are working on right now is when you shop, we want you to be able to see things like retailers that only ethically source their products. For an advertising-based company, that's not an option. We can do whatever you like with the search result to serve you. It's in things like this, not on direct competition, but really focusing on what we can do that an ad-supported search engine cannot.
So as someone who's been inside Google and outside of it, do you think Google is anti-competitive?
Let's take it for granted that Google is a natural monopoly. There's nothing wrong with it, as you know.
So Google is a monopoly?
Well, Google has more than 90% market share by definition. It's a monopoly with a small m. That's fine. We all know that. But when it comes to practices that preserve it, the thing that I worry about the most with Neeva is not our ability to create a quality product, is our ability to get visibility in front of consumers and potential customers like you. And so the DOJ probe is very much focused on what are the practices that prevent competition. We are not against, none of us is against size as a principle for a company, but when that is used to prevent competition, we have more of an issue with it. I think those are the things that we need to make sure, allow for competitors like Neeva to establish themselves.
How do Larry and Sergey and Sundar feel about you and your competitor?
I haven't talked to them about it, but obviously I have lots and lots of friends at Google. There are some folks that say, hey, wish you had done this within. Others understand why it's hard to create things like this within, and you need a clean break. But I would say the vast majority of people agree with the need for a product like Neeva that is just simpler, easier to understand, and more focused on delivering value day in and day out.
So how aggressive then? I know you said monopoly with a small m, that's still a monopoly. How aggressive do you think the government should be in trying to rein in the dominance of big tech and Google in particular?
I think the fact of the matter is, for the past 50 years, essentially antitrust action has been asleep. Our government has been asleep at the wheel when it comes to this. We have also had this infatuation with tech companies that, we thought they could do no wrong. And we realized that as these companies grow and grow, they do have a stifling effect on competition. So we do need to make sure that there is more competition. Let me tell you, as a VC, I am not going to invest in an ad tech company. There is no money to be made out there. But that can happen to many other verticals if we don't take strong action to make sure that there is continuing competition.
Do you think Google should be broken up?
That's for the DOJ to decide. We just want there to be a world in which it's easier for other companies to compete.
We know that the DOJ has been interviewing a number of Google's competitors, the competitors that there are. Have you ever spoken with any government officials or anyone at NEVA?
You know, we are subject to the same subpoenas that other people are, and when the government comes knocking on your doors asking for information, you have to provide it.
What's your response to the judge throwing out the Facebook suit yesterday? I wonder if that feels like a big setback for antitrust scrutiny in general.
It is not. That case was hard to begin with because it reached back into history so much. I actually think, and several of our representatives have said that, I think this will actually increase their desire to pass laws that can actually let people like the FTC take action. So I actually think that it is a temporary setback that is going to result in laws actually undergoing change and the government just having more tools to deal with these very large corporations.
What about the pressure that Google is under in the EU? I mean, there's also a big threat there, and I wonder, do you see that as being more potent than what the US government has thus far offered?
So they think about things like regulation very, very differently. They think about antitrust differently. As you know, we have a 130-year history of how we think about antitrust, and that has also changed in the past 50 years. So I think they have definitely exerted pressure. Europe has been at the vanguard of things like privacy to an extent that our government has not. But I think this is a collective problem. We have a ton of companies that are incredibly powerful across the globe. So I think this kind of probing to ensure that there is fair competition will end up benefiting everybody.
Blockchain and crypto enthusiasts have advanced the idea that blockchain technology, if it takes off, could eliminate the need for Google and Facebook altogether and eliminate privacy issues altogether. What would that mean for NEVA? I mean, are you thinking about the blockchain as you build this out? Or, given that this is technology that some are saying could disintermediate or make search engines in general useless?
I would say that's like 10 to 15 years away. We watch crypto protocols. We are happy that there are things like Coil. There are a mechanism for people to get paid. So we pay attention to things like that. We are happy, we will adopt these kinds of technologies whenever that is suitable for us. But I think we are at least 10 to 15 years away from them having a direct impact on day-to-day services like search that you and I use.
All right, Sridhar Ramaswamy, CEO of NEVA. We'll have to send this to Larry, Sergey, and Sundar. I'll let you know if we get any feedback. Thank you. All right. Meantime, a story we're continuing to watch. Salesforce has kicked off a big bond offering to help pay for its $27.7 billion acquisition of Slack. That deal designed to help the workplace communications platform reach a wider group of corporate employees. Salesforce offering bonds in 6 parts. Coming up, a $30 billion forecast, a scrubbed launch with 11 seconds on the countdown clock, and Twitter rage at regulators. Just a typical day for Elon Musk. We'll have more on the scrubbed SpaceX launch next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Elon Musk remains hopeful and says that SpaceX Starlink will reach near global coverage by August. Ambitious as always. Joining us now, Bloomberg's Ed Ludlow. So first of all, the launch was scrubbed, and we're getting new information in the last minute about why. What happened?
So this launch today was for all their private customers that they send up small sats or tiny little satellites up in space for about $1 million a pop, but they were due to carry some Starlink satellites. What we know from the FAA, literally in the last few moments, is that a private helicopter flew into the restricted airspace just seconds before liftoff. The launch was immediately scrubbed and air traffic control directed the helicopter away. But what we got very soon after was an Elon Musk tweet basically accusing regulators of having too stricter controls, saying that the area that SpaceX is required to have around the rocket to keep people safe is just too big, and that something like this was bound to happen.
Now, Elon Musk was actually on stage at Mobile World Congress as this was all happening, just another day in the life. What did he say? And what did he say about the future of Starlink in general.
This was probably the most substantive update we've had on Starlink in months. He gave so much information that they just passed 69,000 active users who are actually using this internet system around the world. 12 active countries currently, but as you said, they said they'll have near global coverage by August, excluding the North and South Pole. No one lives there anyway, really. What's incredible is that they have kind of worked out the economics of this. He admitted that it costs them $1,000 to make the receiver that you use at home to get the signal from space, even though customers pay $500 for it. So they're trying to get the cost of that down. They're trying to ramp up the activity in terms of satellites. But the system is working, and it has, very little latency. You can play high-def video games with it. It seems to be working, and the promise is for global coverage very soon.
So even if Starlink has global coverage by August, how many people who are connected worldwide would actually be using it?
So Elon Musk describes this system as being the go-between between 5G and fiber broadband. It's designed specifically for places around the world, tops of mountains, deserts, where there just isn't that kind of coverage. In fact, it works better where there are fewer people in less dense cities because the signal has to penetrate through Earth's atmosphere and the sort of skyline. But that's who they're going for. And he also gave some hints that they're doing deals with telecom companies. He said there's 2 big telecom companies they have a deal with. He didn't name them, but this is something that they can work cooperatively with cellular providers as well.
All right, Ed Ludlow, thanks so much for giving us the roundup. Thank you. Okay, moving on. Vaccines have proven to become one of the best ways to curb the rise in COVID infections and get life back to normal pre-pandemic. In the United States, 54% of the full U.S. population has had at least one dose, though the number of those who are vaccinated continues to grow. Many are still hesitant to get it. Joining us now, our Bloomberg News health reporter, Kristen V. Brown. Kristen, of course, the Delta variant, more people fearful, reminding folks of the need to get vaccinated, but there is still a vaccination gap. Why?
Yeah, so one thing that we are seeing right now that is very concerning, especially with the Delta variant on the rise in the United States, is that while there are many counties that are vaccinating large percentages of their population, there is a bottom fifth of counties in the United States where only 28% of people have received a first dose of vaccine. If it's not obvious, 28% is nowhere near enough people to get to that herd immunity threshold. So we have this huge gap where there's a plateauing in the counties where vaccination rates are low. Those counties are not getting increasingly vaccinated, even though the rest of the country is getting more vaccinated. And that bottom fifth of counties could keep COVID in circulation in the United States for a long time.
So what is being done to accelerate folks getting this vaccine in the U.S. and abroad?
It's really tough. There is a push to vaccinate these places, but it really needs to be an on-the-ground effort. I know I've spoken with people doing the vaccine rollout in places like Arkansas, and they've talked about micro-targeting, really working with community leaders in these hesitant communities to get people to trust the vaccine. But the big hurdle here is trust, that in these counties where only 28% of people have received a first dose of vaccine, there is not trust in the vaccine. There's not trust in the government. There is not trust in the public health establishment. And also, people are seeing their neighbors not get vaccinated, so it makes them feel more comfortable in that choice. Versus if you live in a community where everyone else is getting vaccinated, you're also more likely to get vaccinated. We've seen that trend continue throughout the vaccine rollout.
Right. So what does a vaccine split mean longer term if it persists?
The vaccine split is really scary, in my opinion, because it means that, you have these pockets of under-vaccination. And in those pockets, the people there are at risk for getting COVID. But it's not only those communities that are at risk of getting COVID, because people don't just stay in their hometown, right? They travel around. And as those people travel around, they can spread COVID to other communities. And more importantly, we've seen the Delta variant. It's more contagious. In the U.S., we also have the Gamma variant. These communities could become incubators for more future variants that could potentially even evade the vaccine. So it is crucial that we win the trust of people in these communities to close that gap between counties where lots of people are vaccinating and counties where not very many people are vaccinating, because it could hold all of us back from returning to normal life.
All right, that's the reality. Kristen V. Brown, our Bloomberg News health reporter, thanks so much for bringing us that update. Sticking with vaccination, Moderna says its vaccine has produced protective antibodies against the very contagious Delta variant, which is fast becoming the dominant strain in France, Germany, South Africa, and other countries. This is the strain that was first identified in India and, of course, has also spread now to the United States. Coming up, a digital education platform now valued at $3 billion as popularity exploded through the pandemic. We're going to be talking to the CEO of ABC Mouse's latest funding round. That is next. This is Bloomberg. A digital education platform just got a big boost. Age of Learning, the creator of ABC Mouse, the top children's education app in the United States, is now valued at $3 billion on its most recent funding round led by the private equity firm TPG. The platform gained popularity amidst the pandemic as schools went remote and parents looked for new opportunities to educate their children. I was one of them. Joining me now is Age of Learning CEO and former Disney executive Paul Kenlin. Paul, thank you so much for joining us. So ABC Mouse kept my kids engaged throughout the pandemic, so much appreciated. Curious what the pandemic trends you saw have been and how those are evolving now that kids are starting to go back to camp, summer camp, and eventually school.
Right. Yeah. Thanks for having me. Yeah, what we saw during the pandemic, a huge spike in usage of digital education apps. People turned to us in huge numbers during the pandemic. We saw a rise in usage, pretty significant rise. And interestingly, as in a lot of states, they started going back to school, the usage rates didn't really drop. So kids continued to use ABC Mouse from home at a very high level, and that's kind of continued on through the present.
So do you expect that to continue in September when hopefully, school is back in session?
Well, hopefully they are back in session. We're meant to be supplementary to what kids are doing in school. But yeah, I think we'll see a spike, as we always do, of usage during the summer. And it should hold up very well into the fall.
Now, as a parent, and I know many parents share this feeling, you want your kids to be doing something productive and engaging with the world at all times. If that involves a screen, you want that screen time to be productive. But my preference is always not screen time, if I can help it. What do you have to say to parents who are concerned about how much screen time their kids are getting, and whether, even if it's on what's supposedly a productive platform like ABC Mouse, that is healthy for them?
Yeah, what we've learned is that with as little as 45 minutes per week on ABC Mouse, the children make significant learning gains. So those levels are well below what any experts recommend for maximum screen time.
You also were top executive president of Disney in Japan and Asia. What are the growth opportunities you see? The story today mentions music, science, and other geographies. What's next?
Yeah, I think a couple things. One is international growth. Having spent a lot of time in Asia, I think gives me a little bit more understanding of the opportunities there. But Asia, I think, is a huge opportunity for us as a company. We're in China right now. We're in Japan. We're looking at India, Indonesia, South Korea, Vietnam. So lots of growth there. And then in the U.S., we have next generation adaptive learning products, which we are super excited about. Math and reading that we're piloting right now in Florida, Texas, and California. And those are adaptive learning products that assess every single child and put together a personalized learning path for every child.
So any tips for parents, if they're using ABC Mouse, how to monitor their uses, how much to offer their children and how often?
Yeah, I think children, for the most part, will want to get on ABC Mouse. Most kids really enjoy it, and it's built to be that way. But for a younger child, say 2 to 6 years old, put him or her on for 15, 20 minutes at a time, and you'll see significant learning gains. What we saw during the pandemic is that children that regularly used ABC Mouse didn't have learning loss. And in fact, a lot of them had significant gains.
All right, that's helpful. Good to know. Paul Canlin, Age of Learning CEO. We'll keep our eye on you. Thank you. And that does it for this edition of Bloomberg Technology. Tomorrow, crypto evangelist Mike Novogratz joining us and Slack CEO Stuart Butterfield. You don't want to miss those conversations. This is Bloomberg.